Good morning and welcome to the market forecast for Tuesday, November the 17th. I'm John Hoagland. Thanks for trusting me with your time. If you're already in the markets, hopefully you've got things heading your direction. Of course, if you traded last night, hopefully things went well for you. If not, hopefully you saved enough powder for some of the opportunities that are going to be there for us today. As always, we're going to look at our main four markets, our most popular markets here at Top Step, the E-mini S&P, the NASDAQ, crude oil, gold, and a couple of the currencies, the euro and the Japanese yen. As always, we are going to be looking at these markets in context and through the lens of risk management. That's really our job. We are risk managers more than anything. We always want to make sure and protect ourselves as well as look for those asymmetric opportunities, small risk, bigger rewards. As far as economic news this morning, we had retail sales and import-exports come out already this morning with a little bit of disappointing results. The retail sales numbers and the import-export numbers looking on the board here all out in red. Not too sure how any of this is going to truly impact markets, as we already see most of the equities heading to the downside. We just had Redbook come out, of course. Not that impactful usually. 8:15 we have industrial production, 9 o'clock business inventories, and housing market index. We also have a couple of talking feds speaking throughout the day, so keep your eyes and ears open. As far as other news is concerned, the Twitter and Facebook CEOs are testifying this morning or today in front of the Senate Judiciary Committee on some of the ways that they were perhaps editing information regarding the U.S. election. So they're going to be a little bit on the hot seat this morning. But the big news really this morning is Tesla is being added to the S&P 500. That has boosted the NASDAQ. While the NASDAQ is higher, our other U.S. equities indices are lower this morning. Headline risks remain high. That just seems to just make sense these days with everything that's going on and all the uncertainties out there. The NASDAQ, the S&P and the Dow posted new all-time high closes in the futures yesterday, all of them off a little bit this morning again. Walmart and Home Depot beat expectations on earnings per share as well as revenue this morning. A little bit of contrary information to the retail sales information that was out this morning. OPEC Plus, I should say, is due to meet today regarding the state of the oil market. We're looking forward to the API this afternoon and EIA as far as inventory numbers here in the U.S. API again this afternoon about 3:30 Central. And the EIA, its usual time on Wednesday, 9:30 Central. So we'll look forward to that information. Again, crude oil is in rollover. I've changed my charts and my activities in crude oil over to January. The January volume is still slightly lower than the December, but I would imagine by the end of the day, we're going to see that flip. It doesn't matter which one you trade today. Just stick with the one that you started trading with, whether it's December or January. You're fine either way. Don't worry about that. But by tomorrow, you probably are going to want to switch over to the January contract. And that January contract is running at about a 25-cent premium to the December. You move your charts, move your levels, move them 25 cents higher for the January contract. Where is the COVID stimulus? It's the one thing that seems to be missing from the news and the one thing that really seems to be hanging out there that can either hurt our equity indices or help our equity indices. A lot of folks wondering where that is. Where is it in the news? Haven't even seen much of it in the news in the past couple of days. It's a very important piece of legislation that we need to come to some agreement. So many people and so many businesses are suffering, especially with the new spikes in COVID and the increasing tightening of the states and and the restrictions that they're placing on these businesses. So please get something done and help these businesses and help these people that are deeply hurting because of all of this information. Just going to take a quick look here at the dollar index. Where is it right now? It's off a little bit, 92.30. So a little bit, maybe let's just call it 0.4% lower this morning so far. And our VIX up almost 5%. It makes sense with our equities coming off the highs and heading to the downside that we're seeing a little bit of boost in possible volatility. 23.53 is last I'm seeing. That's a delayed quote. And again, it's up about 5%, just under 5%. I put a couple of links into the chat here. Our holiday packages are out. Discounts on trading combines as well as bundles for resets. Going to be, the holidays are upon us. We always have these holiday packages. Check it out. Click on the link. I also have the link for Market Therapy, which is tomorrow afternoon at 3:15. The good doctor will be joining us again. We'll be discussing the meritocracy of trading and how it can affect your trading psychology. We all know that if we are going to succeed and when we are going to succeed in futures trading, it is 100% up to us. That meritocracy is the one thing that trading has that many other businesses and jobs don't have. It's totally up to us. We also have the group coaching tomorrow afternoon at 1 p.m. Central. Just going to have the opportunity to sit and chat with each other and see if there's any questions that I can help with. Nobody knows everything. Anybody that says they know everything is probably lying, and I certainly don't know everything. So bring your questions, bring your thoughts, bring your ideas. If I can answer, I'm going to answer. If not, maybe it's a good opportunity for us to learn something together. So lots of announcements this morning. We have holiday packages. We have Dr. Menaker on Wednesday. We also have group coaching on Wednesday. The market therapies at 3:15. Markets will be closed. You won't have much to do. Hopefully you'll be able to relax, maybe light a candle, have a cup of tea or a hot toddy perhaps, and join the good doctor and myself. The previous session, well, the first session's already out on YouTube. You can watch that on YouTube. The second session will be out probably tomorrow on YouTube, and then we'll have a fresh session that'll be out in the next couple of weeks. So always look forward to seeing and hearing from the good doctor. Make sure you like, share, comment, question, feedback. Heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. And as always, I want to say good morning to everybody. Chris Pritchard, first in the room. You win the prize. Felix, good to see you. Danielle, guten Tag. Lauren McLaren, good to see you. Kevin Scott from the rainy Caribbean. Boy, can you guys catch a break? You've got another hurricane down there, Hurricane Iota. Hopefully, Kevin, you are safe, and we are certainly going to be sending our prayers to all of you that are in the path of that storm, and hopefully everybody survives and can get on with their lives, of course. Good morning, Nick Mo, Vladislav. Good morning, Murph. Is it true we aren't allowed to trade the whole Thanksgiving week? Well, you are if you are in the trading combine. And good morning to you as well, Murph. Mike, good to see you. Daniel Hodgman, good to see you, Dan. I missed you yesterday. I know we all missed you yesterday. Subconscious 100, Andre, Charles March, Troy, Vast West, Michael H, Esteban, Angelina, Rob T, Michael H again. Angelina, wait, is there an actual prize or is that just some form of congratulations? Well, I just see who the first one in the room is, and I give them a wink and I tell them there's a prize. There's no actual prize. Maybe Angelina, that's something that we can work on. Just like to see who's here first. All right. Yes, Michael, looking forward to market therapy tomorrow. Dr. Menaker has such a I don't know if you'd call it a bedside manner, but when he speaks, I always find him very calming and very well, of course, helpful. I mean, he's a clinical psychologist. He's an active trader. He works with institutional traders. He works with big time traders. But we all have the same thoughts, same ideas, same barriers, and same psychology. Whether we're trading huge money or if we're just trading a little bit of money, it all seems the same. So I always look forward to this. And we're going to have this coming session, and I think one or two more sessions with the good doctor for the year. And then we're going to kind of reassess, and we're going to see what people thought about it, and we're going to see how many people come to it. There's only 100 seats. If you can come, make sure you sign up now. If you can't, don't take up a seat for somebody else. I mean, yeah, you're going to be able to watch it on YouTube eventually, but it's the fact that you're going to be able to ask questions directly to the doctor, clinical psychologist. Always good stuff. Garpati, hello from India in the free trial now. Welcome, Garpati. Welcome to Top Step. Welcome to the market forecast. Lots of good stuff coming at you every day with the forecast, the recap. Don't forget, today also we have the Coach's Playbook. We are going to be talking about rollovers and how rollovers are important to the marketplace, what they do to the marketplace, and to make sure that you are certainly aware of it. Can I expect the same chart and marker depth at the same level too on the trading combine? Also, assuming that you are on TS Trader, you will be able to see everything exactly the same as you are seeing in the trial. All right? So, without further ado, let's take a look into these markets. Let's see what is shaking today. All right. So this is the January F1 2001, the first contract that we're trading that is actually going to expire in 2021, I should say, 2021. Seems like it was just yesterday we started trading 2020. But what a year it has been. Let's see what we're looking at as far as our opportunities. So we are in rollover. That tends to make the market a little bit more range bound. It's no rule that says that anything can and will happen. This seems to be kind of operating that way here for this rollover. We've got an inside day and extended trading hours yesterday, today inside yesterday. We've got a lot of people waiting for new information, not just to get the rollover over with, but there seems to be a lot of question as to demand, supply. We have OPEC Plus meeting. We have the API, the EIA, all of this coming out in the next couple of days. The market really kind of digesting in this area. And I'm sure that our longer time frame traders are appreciating this because it's letting them work the cheap rollover instead of chasing directional price and directional markets. So open interest, we lost 17,000 on this move to test that weekly kickoff high yesterday. That's overall the contracts, so that's somewhat rollover related. It's difficult to gauge volume and open interest during rollover, which makes crude oil a particular case because it rolls over every month. So we get 3 weeks basically of solid volume and open interest information. And then for that week of rollover, everything gets a little bit askew and it gets a little bit more difficult to read. So this boost in volume yesterday that we're seeing on this chart, again, largely related to rollover. We're seeing the volume falling off in the December contract and adding volume to the January contract. Yet another reason that it's difficult to read the volume in the current front month. So we lost 17,000 on a higher volume. Difficult to read. Doesn't necessarily mean we lost 17,000. contracts that weren't going to be expiring next week anyway, or the end of this week anyway. So we're basically range bound. We're in rollover. We're inside weekly kickoff high and low. I'm going to call this shorter time frame activity, especially before the API and the EIA in the next couple of days. Okay, so now we're looking at our short time frame information. So we have weekly kickoff high up here in the June contract. It's 42.15. Settlement yesterday 41.57. Again, the January contract. I don't know if I just said June. It's January contract. The market really kind of not bringing any information as far as shorter time frame inventory. We probably got a little bit short here. I was putting my notes together. We were up here. We didn't really have any overnight inventory. We've taken a look. I was thinking that we might get a decent look or a decent opportunity, number one, to close the gap that was left here, and another opportunity to perhaps come down and see this unchecked naked point of control, which put us down to about 40.60. We put in a low here at 40.81, stopped short of value from 2 days ago, from Friday's activity. That might be kind of important information. We had a pretty decent move to the downside. We're seeing buying coming in the regular trading hours, not currently able to see if the opening range is the low of the regular trading hours session. We are opening out of balance according to yesterday, but in the bigger picture, we're in a central area of balance. So I'm going to suggest even today, even though we're out of balance in the day time frame, I'm going to suggest trying to stay patient and look for those opportunities as the day goes on. I'm looking for, because the market opened basically in the gap, we may fall into a day of repair. A day of repair, what is that, do you ask? Well, a day of repair is there's a high volume node or the point of control from yesterday that we are below. There is a high volume node or the point of control from Wednesday, which we are currently above. When we do this and we open in a gap between those 2 days, there's a tendency for the market to probe both sides of the marketplace during that session. So I'm going to be looking for possible opportunities up near settlement / point of control from yesterday. If we get the opportunity down here near this point of control from yesterday, that might be also an opportunity for me to look for an execution. Again, if only because it's going to be a reference level that I'm looking for that allows me to keep the trades cheap. Always be thinking about taking the trades cheap. All right. The E-mini S&Ps. Okay, volume maintained yesterday on the up move. We added 14,000 in open interest. That's encouraging. That's encouraging for continuation to the upside. There's a lot of uncertainty. The market doesn't like uncertainty. You can see that we put in a new all-time high close. Our all-time high is in the overnight. Markets tend not to like that. But the volume increase and the open increased indicates we still have buyers willing to come into this market and push this market higher. In the S&Ps, the NASDAQ is a whole different story. We're going to take a look at that shortly. And we're just focusing on the technicals and the profiles for the S&Ps and some of the internals. The volume was it held up yesterday on up days. I'm good with that. And we added 14,000 in open interest. Maybe some new buyers coming into this market. Take a look at the 30-minute chart. See what we're looking at for this morning. Our overnight high and overnight low inside yesterday's extended trading hour range. So we're basically kind of spending time above this weekly kickoff high, which was very tight this week, for a reason. We're looking for this market to change direction, or just to continue the move upside, or to get some sort of a pullback. We haven't seen the pullback. We haven't necessarily seen momentum to the upside either. We're going to be opening in range and value. We were unable to close this gap yesterday. So far, unable to close that gap last night. Our overnight low looks like it might be a target-rich environment. Again, we are currently digesting possibly some negative information from retail sales. We did have Home Depot. Where is that information? Where did I write that down? Home Depot and Walmart beat expectations. There's some good retail information and some bad retail information in the market. So, again, we're going to be opening in a gap. Probably. Maybe not. We're going to open in the range. We have some overnight inventory to the short side. If our overnight low can't get taken out, if we again can't close this gap, I'll be looking for opportunities to the long side. All right. This weekly kickoff again should remain supportive if we have the opportunity to see price get to that level. If we can't hold that, we've got this naked point of control here. If we do open in the gap, then we have another repair type of situation that may come to play out. Settlement in the S&Ps, just so you're aware, 36.23 even. We got quite a few overnight shorts in this market. If we can't move this market lower, we may see that inventory adjust back to the upside, back to settlement, which brings us to a pretty high target-rich environment. We've got settlement here, we've got value high, and we've got point of control, all right in this neighborhood. Interesting spot up there. NASDAQ, again, in a different situation, getting some good news about Tesla. We had a decent volume boost on this on the move upside. Okay, I would call this a good volume boost. These equities markets don't tend to bring in a whole boatload of volume on the upside. It's the downside that brings in the volume in these. So we maintained volume. We added 2,400 in open interest on an up day, but we're getting pretty close to some pretty sticky areas here. Some pretty stiff resistance up here. This trend line, which really had 2, maybe 3 contact points. This happened in the overnight. We're unable to hold above that weekly kickoff high of 12,130. We've taken a look up and tested this trend line in the overnight. What does this mean for us in the daily chart here? Let's take a quick look. Settlement is 12,005, 12,005. This was a pretty decent move to the upside, kind of maintaining, closing near the high. No real late spike with which to work with. We're seeing mixed overnight information. I'm not going to be depending on our overnight traders for any early opportunities. This is a target-rich environment. Like I like to say, we've got our overnight low, we've got value high from yesterday, and we've got a point of control just below that. Target-rich environment. Lots of confluence down in this area around our overnight low. We are holding above yesterday's area of value. We held basically above the previous day's area of value after remaining in that area of value for 3 days. Value continues to move higher. That's important information. Important information. Opening in range near the high of value. This value low could end up being supportive in short time frame. And in the gold, good volume off the low. That weekly kickoff low yesterday, 1860, we took a look at it in the overnight. We didn't get the opportunity in the regular trading hours, but we did increase some pretty decent volume off that level. We are centrally located between weekly kickoff high and weekly kickoff low. We lost 1,000 in open interest. A lot of folks kind of sitting on their hands, holding their positions, not really changing much in gold. And again, because we are centrally located, I'm looking at short time frame control. What does short time frame control mean? It means the market is more likely to hold short time frame levels, to respect short time frame levels, and look at the overnight. Held pretty much the value low from yesterday, held the value high from yesterday. The market really trading back at settlement, no overnight inventory, nothing to lean on as far as inventory adjustment. Stay very patient in this market. Watch for changes. If we do have a test of weekly kickoff high or weekly kickoff low in the near future. Those are going to be your more important longer term levels. On the inside here, again, try and stay patient. Value high, value low from yesterday. Overnight low, interesting. Overnight high, interesting. Right here in the middle, I got nothing for you. I got nothing. And the euro volume was okay yesterday. It's still off pretty good here. We're seeing the market, after a test of this level last week, we're kind of one-time framing higher. Are we really impressing with the volume in that direction? Not really. We lost 1,500 in open interest, so there's not a whole lot of money coming into this move to the upside. This seems more like short-time frame volley back and forth. We have this 1893 previous weekly kickoff level, which has shown some degree of resistance this morning. Let's take a look at the 30 and see what we're seeing here. Again, I seem to get so long-winded. I try and be done before the equities open up. Here's that test above that previous weekly kickoff level here. We've got a whole bunch of overnight longs up against this level. The overnight longs settlement is all the way down here at 118.50. Almost all of our almost all of our overnight activity moved price higher above the range from yesterday, above settlement, but again up against a possible area of resistance in this previous weekly kickoff level. I'll be looking, if I'm looking for longs, and I might be in this market, I'm not going to be looking to buy it up against this level without some sort of breakout and some volume up above this level. I'm going to look for this market to come back down and give me a cheaper opportunity for a long. We've got all these longs here. If they don't continue to get paid in regular trading hours, at some point they're going to push this market lower. If they can't close the gap, that's going to be important information. If they can close the gap and get back down to settlement, again, another target-rich environment. We've got settlement, value high, and point of control all right in this area. That's, I call those target-rich environments. There's confluence there. There's different reasons to take a look at an opportunity there. And the best part about it is it can remain a cheap trade. You're trading against an important level. If it doesn't hold, it may be wrong. We talked last week about how this moved to the downside and how the volume shutting off, the inability to trade below the weekly kickoff low, and how open interest was all telling us that this big move to the downside really ran out of steam relatively quickly. We talked last week about if we can't accept below this weekly kickoff low, we're going to probably volley all the way to weekly kickoff high, which is exactly what has happened. We had a little bit of higher volume yesterday. We lost 3,000 in open interest, so it doesn't even tell us that this activity, one-time framing activity, is bringing in stronger buying as of yet. There may be more buying to come. We still have upside structure and higher lows and higher highs on the daily chart here. And when you look at where we are in this channel, we're right in the middle of it. Could be another interesting opportunity for us here in the Japanese yen. I've been, since last week, talking about, early last week, I think, talking about how this is a pretty good upside opportunity that really, if I'm long a whole bunch, I'm lightening up here. Take a look at the 30, and we'll get down to business. Again, I'm talking too much. Okay, so settlement here, 95.64. The market, holding overnight longs. Initially, our opening range was the low of the regular trading hour session, but up against this resistance level, wasn't really expecting much of a move off of that. As a matter of fact, the inability for this market to be able to hold and accept above this weekly kickoff level leads me to believe that all these overnight longs are going to start to get a little bit nervous. And if I'm looking for longs in this market, I'm going to stay patient and wait for better trade locations to come to me, because I think my direct competitors who are holding longs up here are going to start to get nervous. They're going to move this price lower to give me an opportunity for a better trade location if I believe that this market is primed to continue to the upside. All right. So just a couple of thoughts here. Hopefully, I did get the right URLs up there or the right links for the uh, coaching sessions as well as for the packages. Hopefully, that is true. Right. Seymour, talking about no trading in funded accounts between 310 Friday, November 30th and Sunday, November the 29th, trading this time. It's a holiday week, Seymour, in the U.S. It's Thanksgiving week. A lot of traders take that time off. There's going to be low liquidity, there's going to be low volume, and there's probably not going to be that great of opportunities. So, in order to protect our traders from lack of liquidity or that, as well as protect ourselves, we're asking that you do not trade during that time. Okay? 10 days off for Thanksgiving. I'm going to be taking that week off. I don't think I'm going to be engaging in the marketplace. I've been around this industry for a long, long time, and I've learned my lesson. Okay, now as far as the rest of the year, there's still a lot of uncertainty out there. There's still a lot of opportunity yet to come. We just don't think that there's going to be great opportunity, and I've seen lots of traders have really bad weeks on holiday weeks. I've seen traders have good weeks too. It just seems that the former is the most likely. So take your time. Get rested up. Do some study. Review your journals. Read another trading book. There's lots of things to do to continue to work on your development as a trader, even if you're not involved in the marketplace. Take that time. Get rested up. Okay, I'm 5, 6, 10 minutes too long. Dan's going to yell at me. He thinks sometimes I yammer. Thank you very much, Joshua. Thank you, Seymour. Thank you all for joining me. Looking forward to a good trading day. Dan will be back for the market recap. Don't forget the coach's playbook right around, let's call it 11:20, 11:25. That'll be done live again. We're going to be discussing what rollover means to markets, and make sure you click on those links. The holiday packages are out there, and then tomorrow we have group coaching and market therapy. Look at all this stuff we bring to you. We are really enjoying, and it is our goal to see your success. So take your deep breath. Stay humble, grateful, creative, and calm in your trading. Get out there and profit. We'll see you at the coach's playbook just after about 11:15, 11:30 in that area. Done live. We'll see you then. Trade well.